Fed Retirement Planning Community. Cheers. This is hashtag Fed Retirement Weekly, episode 7. And today's episode was from a question regarding basic life insurance. But before I get into it, if you haven't subscribed yet to our newsletter, where essentially every couple weeks I will send you an email regarding some information that has come across as far as news or some various guides I give or PDFs, ebooks, things like that. Whenever I have something new, I send that out along with new articles and things that I write. If you aren't a part of it, I highly suggest you become part of it. We've got almost 800 federal employees in it currently, and it continues to increase quite dramatically every day. So if you aren't a part of it, I would highly suggest you do so. But today we're going to talk about basic life insurance. And essentially the question was, what happens to my basic life insurance in retirement? Just to give a brief rundown for those of you that aren't in the know, and if you want, I guess, more information on this, I did a video on the basic life insurance basics, as well as I did an article on it as well. You can find it up here and click the video and it will take you to that one as well as the article. But a little bit, just I guess a brief talking on basic life insurance, something you need to be aware of. Basic life insurance is essentially what they do is they take your base salary. So let's say your base salary is $57,500. Okay, that's your base salary per year. They allow you to use that as basic life insurance. So they take your base salary, they round it up to the nearest thousand, and then they add 2,000 to it. So what that looks like is if your salary is $57,500, you'd round up to $58,000 plus 2,000. So you would have $60,000 in basic life insurance. Okay, that's basically just a standard death benefit that if you pass away, that's what's going to pass to your heirs whenever you pass away. Now, every agency pays for this except for the Postal Service. The Postal Service, for whatever reason, does not have to pay for basic life insurance. It's a great benefit. Everybody else has to pay 15 cents per thousand. So if you think about it, every $1,000 that you earn in salary, you've got to pay 15 cents worth, okay? Because it is based on your base salary. It's pretty cheap, especially for what you receive, and that doesn't increase except when you get into retirement. Now, a common misconception regarding what happens to your basic life insurance in retirement is that basic life insurance goes away. But that's not the case. Your basic life insurance doesn't just go away. It can slowly go away if you choose to, but they give you the option. So you can take a few different options. You can keep it all the way up. So you can keep 100% of whatever you have at retirement. So whatever your salary was the year before you retired, you can keep that amount. You can choose a 75% reduction. So that would reduce your I guess your death benefit down to 25% of the original amount, or you can choose a 50% reduction. Now, for the 75% reduction, you don't have to pay for it. And that's what the majority of people do. They don't choose to keep it. What people end up doing is they decide they don't want to pay for it. They'd rather have a policy outside, or they're in a stage of life where they don't need life insurance. Because, and this is something that I talk about with my clients, not everyone needs life insurance. Now, I think life insurance is very important, don't get me wrong. However, if you've planned correctly, which not many people have, but if you have planned correctly, by the time you get to retirement, the funds that you have saved in, I guess your TSP or other investments, and you have low debt, that should take over for things such as, estate planning and things like that. So you don't necessarily need life insurance, but I think the majority of people do need life insurance. And so basic life insurance, keeping basic life insurance in retirement is important. Now, if you choose the 75% reduction option, that's something that automatically happens if you don't make a choice, okay? And what happens is whenever you turn 65 or retire, whichever's later, I'm just gonna repeat that for you, when you turn 65 or retire, whichever is later, they're going to reduce your death benefit of your basic life insurance by 75%. Okay, that can happen automatically. For you postal employees, you don't have to pay for that. For you, I guess for every other agency, you don't have to pay for it either. It just gets reduced. Now, don't worry, it doesn't reduce by 75% immediately when you turn 65 or retire. What happens is when you retire, it reduces by 2% each month for, I believe, 38 months is what it ends up being, and it starts the second month after your 65th birthday. Or I guess if you retire, it starts the second month after your retirement if you retire after 65, which some do. Based on numbers, the majority don't, but it's not a problem if you do. Now, the next option, which you do have to pay a premium for, is the 50% reduction option. So when you retire or turn 65, you can decide to reduce your death benefit amount to 50% of the original amount. Now, this one does have a premium. The 75% reduction one does not, but this one does have a premium. It's not very large, really, because it's not that much insurance, but it does have a premium that they take out of your pension and will stay until you decide to reduce down to the 75% reduction or cancel it altogether. Now, you can choose to go back, however, you can't choose to go forward. What I mean by that is if you decide to reduce down to the 75% option, you cannot decide, hey, I made a mistake, I actually do want some basic life insurance, I'm gonna bump up to the 50% reduction option. You can't do that, okay? So once you make a choice, you can only go backwards, you can't go forwards, okay? And then the final one is to keep it all the way up. So you can choose to keep 100% of the death benefit of your basic life insurance in retirement if you choose to do so. Now, obviously the premium will be higher than what the premium for the 50% reduction option is. And, you know, for many federal employees, it's worth it because they want the life insurance. My suggestion is to try and see what you would qualify for outside the federal system. I've said this multiple times, but there's no problem in getting a quote, finding out how much it's going to cost, and then comparing the two, okay? Basic life insurance may win out, but you don't know unless you try. So this has been kind of my thoughts on basic life insurance and what happens with it in retirement, something to be aware of, and then some I guess, tips that I would give towards it. If you have any other questions or would like to be featured on Fed Retirement Weekly, basically any social media, type in hashtag Fed Retirement Weekly with your question, whether that's Twitter or Facebook or Google+, and I will typically find it and I will answer your questions, or feel free to email me in the link in the bio below. But I appreciate your questions, and we will see you next time.